Hello everybody, welcome to a new video on RRG and relative strength. My name is Julius de Kempenaer and I am recording this on, I'm gonna say Wednesday. It's actually already Thursday I see on my clock. So Wednesday after the close of the market in Amsterdam, the Netherlands. What I want to do in this video is take a quick look at asset class rotation and then go over what's happening in sector rotation, subdividing the 11 sectors in offensive, defensive, and sensitive, and see if we get a coherent picture or a coherent story out of that analysis. Let's get started right away. Here is the relative rotation graph showing the rotation for a group of ETFs that represent various asset classes. And if we dive into this, then there are a few very interesting rotations. First of all, there's Bitcoin, which is a super long tail powering into the leading quadrant. So there is no doubt about the current strength of Bitcoin. And I actually use Bitcoin as kind of a proxy for crypto in general. So if that's your cup of tea, then you're in good shape. Crypto and Bitcoin in particular are doing very, very well. To a lesser degree, but still very good, is the tail of SPY. And you see that it has the same type of rotation, just a lot less spectacular, a lot less long. And that the reason for that is that Bitcoin, first of all, is not in the VBINX index that we use here as the benchmark. And second of all, the moves in Bitcoin are way bigger than in the stock market. What we see is, especially the last week, it's very long, or this week on so far. So that's Monday, Tuesday, Wednesday, price development is actually very, very strong compared to the what we call RRG velocity, the distance between the two nodes over the last few weeks. So that's a very positive sign for the stock market. It's now back into the leading quadrant. On the other hand, we see all these yellows, that's two commodity indices, that's corporate bonds, high yield bonds, government bonds, all making an opposite rotation. So this picture really favors stocks again, I should say. We're really back in that game it started a couple of weeks ago and it's now really getting more convincing. The only thing that I think could be contradictory is the weakness of the US dollar. If you look at the US dollar, it's really powering into the lagging quadrant, really underperforming. And very often, strong dollar aligns with the strong stock market. So those are two conflicting rotations. But I'm going to take the rotation for the stock market itself, obviously, over the current weakness of the US dollar, because there's a lot of other factors in play here that I am absolutely not qualified to go into, but I know that is the case, and therefore I'm aware of it, but I'm going to leave it as it is. So this is the weekly RRG. If we take that to the daily, obviously the picture changes a little bit. For both Bitcoin and stocks, the strongest on the weekly, you can see that they're still on the right-hand side of the graph, but they're both starting to curl back up. So that's a good thing. If SPY is able to actually move back up and get back into the leading quadrant, that'll be a very strong sign, because that means that SPY is then, or the daily tail of SPY is then in sync with its weekly tail, and usually that's a very good sign. Same goes obviously for Bitcoin. But what we also see is that those rotations in the blue, except for GSG, that's one of the commodity ETFs, they're all rotating the other way. So they are on the verge of getting back in sync with their weekly tails. All in all, from a sector perspective, things are getting back again pretty positive for stocks. There was some doubt there. There was some weakness going on. That seems to be shrugging off right now. And a lot of signs for stocks in general, and I'm looking at SPY, are starting to get even more in favor than they already were. Let me say it like that. Let's have a quick look at the chart of SPY. So we've got that out of the way. Here is the weekly version of SPY. I'm going to blow this up here. The weekly chart of SPY, and you can see that we have now cleared this overhead resistance that was keeping the market under pressure for 3-4 weeks. And then last week we broke higher, and we're so far this week, we've got a good follow through. So the next, and I'm going to say this is a very major resistance area around 610, 610. And you can see that 613.23, that was the old peak. And if that is taken out, that will very, very likely cause an acceleration of the move. That's a very important overhead resistance level. There's two tops there. If we break that, especially because it's a new all-time high or a move to new all-time highs, that's going to be a pretty major move. And I expect a lot of follow through there. Also, these negative divergences, they're now void. They have been negated. We've had a low below 30, way below 30 for the RSI. We've got a new low in the MACD. So all of that is water under the bridge. We can now look at the market as it is. There's no divergences looming. And 613, I'm going to say the area around 610 is going to be very important for SPY to watch. Here is the daily version of SPY, and we see the move in a little more detail. Here's the overhead resistance that was broken. We're now following through, and the area around 610 is now coming in sight. Here we do see some negative divergence building up in the RSI. That's the daily version, so it's a lot shorter term. That could put a little bit of pressure on the market, but I am not expecting this market to drop below this support level, which is around, let's say 600, little lower, 595, 600. So all in all, the picture for SPY after this little dip is getting better and better, and it will get much better beyond 610. Here's the chart of euro dollar. And obviously when this goes up, that's strength for the euro and weakness for the dollar. And we see the break out of this broad trading range, and we actually had the break, the pullback, and now we're getting back up. It was a little bit tricky here, but I think the direction is now pretty much defined. There is potentially resistance in this 115 area. So we had this 114.93 here, 14.95 here, and then this peak at 15.73. So that's potentially going to be an area of resistance. But other than that, this looks like a strong uptrend to me. And if we take out that previous high, that's going to be confirmed. And this is the weekly chart for a euro dollar. If we switch that to a daily version of this chart, on this daily, we see a little bit more detail, but the series of higher highs, higher lows is clearly visible here as well. This is the breakout that we saw on the weekly, the pullback, and now a renewed version of higher highs, higher lows, with no overbought situation for the RSI. So all in all, a strong outlook for the US dollar as well. But as I said, it's a little contradictory. Usually you would expect strong dollar to be in line with strong stocks. Maybe that's decoupled for the time being. I'm going to stick with the SPY chart as the main indicator, the main lead indicator for the stock market.
If you're watching me talk about RRG on the Stockcharts TV channel, and you cannot replicate it, that is because you are not a member yet. If you like what you see and you would like to have the same functionality as what I'm using in my videos, at least take a free trial, check out the functionalities of RRG, and after that, we'd love to see you as a subscriber to our service.
Let's quickly move to sector rotation and see if we can get some confirmation for stock market strength, or whether we will see more doubts or mixed signals. If you look at this is the weekly RRG for the sectors. And I think that probably the most interesting or most widely used tail to watch is for technology, XLK. Most important sector in the universe, most important sector in the S&P 500. It's traveling at a strong RRG heading. And what you can see is that last week we ended here, and that was still on the left-hand side and won to only the third. So it's the third weakest sector if you just look at the RS ratio. Right now, you see that things have changed and that energy, healthcare, and still discretionary are now on the left, and technology has jumped and is almost crossing over into the leading quadrant. So that's an important move. What you also see is that the two sectors, utilities and staples, that have been the cornerstone of the relative trends recently, are now starting to really head lower. They already started losing momentum, but now they start moving lower on the RS ratio scale as well. So that's not a super good sign. They're still very high on the RS ratio scale, and you know that that means there is a possibility for a rotation back up. They're also still in the top 5 of the best 5 sectors, the block that I'm tracking. And yes, I know that the results there are lagging the S&P 500. I look at it, people, comments on it, and that's fine. The only thing is that I know that these systems need consistency and you need discipline to track them. Do I like being underperforming 6%? No, of course not. But I know that it is happening in those systems, and an underperformance, the worst underperformance was way more. It was like 10, 15%. I don't know on the top of my head. I know that there was a drawdown of 48% in line with the market back in 2008. But other than that, you got periods of outperformance and underperformance. Right now, we're going through an underperformance, but I'm pretty sure that we will pick up sooner or later. We'll see, but I'm going to track it. I'm not expecting anyone to copy it. If you do it, great. Let me know how you go. I've got a small account that I'm actually tracking it myself with real money, and I'm tracking it in my blog. And I've promised myself to be committed and continue just following the signals, following the ranking. Having said that, this is a completely different approach. This is just visually looking at the tails and the rotations and trying to make sense of the market in combination with the price charts. And what we see here is a very clear strength for the technology sector, and utilities and staples getting more defensive. Now, if I want to have a good handle on cyclical versus defensive or sensitive, I'm dividing the sectors into 3 groups: offensive, defensive, sensitive. I've set up 3 RRGs for these 3 groups, because then I can get a better handle of what's happening in a group or on a group level. And you can actually save them as bookmarks in your browser. If you don't know how to do it, send me an email and I'll send you a little clip on how to do it with an example. It's super simple. It's not a Stockcharts feature though. It's a feature of your browser. So here we have RRG large cyclical. That's the group of sectors that are offensive, cyclical in nature. So that's consumer discretionary, it's materials, it's real estate, and it's financials. Now look at this. I've been, confused, maybe too strong a word, but like over the last few months, like what's going on here? How is this rotation happening? Now what you see is that this group of offensive sectors is rotating out of favor for 3, 4, 5 weeks. Consumer discretionary picking up a little bit, but it's on the RS ratio scale the weakest. So to me, this group is not very strong in outlook, because you got all these tails rotating on a negative heading. And if I do the same for the defensive sectors, I get this. I got utility, staples, and healthcare. They were strong, but they're rotating out of favor. Now I got 2 groups. I got offensive and I got defensive that are both rotating out of favor, with the market getting stronger and stronger and taking out resistance levels. How is that possible? And that's when you need that third group, group of sensitive sectors. And there I think this is the answer to that question, because here you see industrials, and we know that has been the strongest sector for quite some time. Here we see communication services, which carried the market for a really long time and is now going through a bit of a setback. But look at how long communication services has traveled through the leading quadrant. This is happening here, November 2024, it's almost 7 months. And now we rotate kind of out of favor, go through weakening, but we're still very high reading. And then it was taken over by industrials, which is now the strongest sector. And now you see technology actually, joining the club and moving into that leading quadrant. So 3 out of the 4 sensitive sectors are really picking up now. Technology and communication services are really important sectors. They're really big sectors. So from because this is a market cap weighted index, they make an impact. And the only one that's out of favor is energy, which is also, by the way, a very long tail moving into the lagging quadrant. If you bring this back to, the bigger picture, if you want, it is especially this group of sensitive sectors, tech, industrials, communication services, that are now driving the market. We had that done by utilities and staples, not so much healthcare. And that was an interesting situation because defensive sectors kept the market afloat. And then we saw some carryover to offensives, and now it's actually the sensitive ones that are picking up. So I think it was a very interesting sector rotational pattern. I think that it's getting clearer and clearer every week probably. But this move in technology, I think, is really important. It's very close to crossing over into leading. It will join industrials. And if communication services is able to actually curl back up and pick up and move into leading, then we've got all 3 of those inside leading and outperforming the market, or in relative uptrends versus the market. And that's really going to be a good foundation for the S&P to move higher. If we quickly switch this chart to a daily version, then we see how technology is now actually starting to move up. So technology is really on the way to curl back up into the leading quadrant, and it will then join. So then we will have the daily and the weekly tail for XLK to be at a positive heading, which will be very good. We can see how communication services is very close to the benchmark, but actually starting to point back up again. Not much difference between SPY and communication services, but when it's back into leading, that might start to pick up again. The one that's getting out of favor is industrials. That's the one that was longest inside the leading quadrant. So not a surprise that it is lagging some of that. It would be a shame if this actually really moved into the lagging quadrant, because that could be a drag. And then there's a strong improvement of the energy sector over the last 2 weeks. This is 10 trading days, so 2 weeks. But it's still the lowest reading on the RS ratio scale. So we need a little bit more time there. Anyway, from a sector rotational point of view, I think that it's interesting to see that not the offensive sectors, not the defensive sectors are showing us the tails with a very strong RRG heading that we love to see as a foundation for the market. But that is coming from the economically sensitive sectors, and then especially technology, communication services, and industrials. So all in all, the sector rotational pattern between offensive and defensive remains blurred. Let me put it like that. But the rotation for the sensitive sectors is getting clearer. And because they are such heavyweights, that is an important factor for the S&P 500. As I said, when SPY takes out its all-time high, when technology takes out its all-time high, that's really going to be an important factor for a further rise in the S&P 500. Let's take a quick look at the individual charts for those 3 sectors, starting with industrials. And you can see that it has already broken its overhead resistance and still holding up there. That's dragging up the raw RS line, and it's dragging up both RRG lines. So industrials, despite the little setback that you see on the daily RRG, is still solidly above its previous all-time high, and definitely a strong sector from a relative perspective. Communication services is not there yet. It is pushing against its overhead resistance, and that is around 105, this old peak here is 105, 105.27, 105.02. So say 105, a little higher. If that gives way, then we can definitely expect an acceleration in XLC in communication services sector. And it will also, and you can see how nicely this relative strength line has hugged its rising support line, and this is ready to move higher, and that will definitely cause those RRG lines to move back up. And then you can see that tail inside the weekly RRG to curl back up into leading. So keep an eye on 105, a little above 105 for the communication services sector. And then finally, we've got technology, XLK. Again, it's so close to breaking higher. The highs here are 234. Let's say 235. I think if 235 gives way for XLK, that's going to be a pretty big signal, a pretty big trigger for a move higher. You can see that relative strength has already moved out of its falling channel, and it's dragging the RRG lines back up. If that happens, if both XLC and XLK take out their all-time highs, that's going to be a really strong undertone, a really strong foundation for a move higher in SPY, despite the conflicting, probably not, but mixed signals that you get from the offensive and defensive sectors, which are right now not really adding to the performance of the S&P 500. I'm going to leave it at this. Thank you for watching. Let me know what you think in the comments. We'll have the discussion there. And yes, you can tell me all about underperforming in the top 5 sectors. I'm keeping on tracking, but I'm very happy to discuss it and share any details that you're interested in. Thanks again for watching, and looking forward to seeing you in the next video of RRG.